I bring you greetings from the GST and Indirect Taxes Committee. The GST and Indirect Taxes Committee has been in the forefront of policy making and implementation initiatives of the Government of India. Whenever any branch, any region approaches us that they would like to conduct a program under the auspices of our committee, we don't wink even an eyelid. Within that time, we approve the programs because we believe that these sessions which are conducted by the branch are going to be of immense benefit to the members. As a policy-making body of the Institute of Chartered Accountants of India, we firmly believe that the implementation, the conducting of the programs, the conducting of sessions, lecture meetings, conferences is the job of the branch. So when Laddaji told me that, sir, we are going to do this program and I want you to come, I, in fact, told him and one step ahead and said, I promise you, Laddaji, I will not be there, but the program will be there. You have to conduct the program. You are the person who is the implementing person, and you will do it. From our part, we interact with the government of India. In fact, we used to certify 9 and 9C. It used to be an enormous burden, I was told by the members. Government on their own realizing a lot of limitations on the 9 and 9C ensured that the 9C certification was withdrawn, maybe for a few years from now. But please wait when the new GST returns is going to be announced by the Government of India. New forms are going to be announced by the Government of India. You will find the certificate of chartered accountants coming back again in this forum. But sir, one more work is going to come your way. 2017, 18 and 18, 19, a circular is to be issued by the Government of India, whereby the mismatches which has to be certified by the chartered accountants. One more professional opportunity and one more opportunity for the branch and speakers to speak on this topic as and when the circular is issued. As the chairman of the committee, I promise you that all of us in the committee will work for the betterment of the profession, for a fair implementation of the taxes. Friends, I always premised that if there is any issue which any of you are facing and you need a resolution, you need an answer to be taken to the government authorities, we are here to help you. The GST and Indirect Taxes Committee, email ID gst@icai.in, is one of the most sought after email IDs in this country. Innumerable number of emails we receive on a daily basis. If you also have any issues, kindly raise it to us. As today, we have a direct interaction with the CBIC, with the GSTN and the GST Council, and of course to the state governments. 20 about states in India, I have personally met as the chairman of the committee. I have met the commissioners of the state taxes. To almost 12 states in India, we have done the capacity building programs. Certain states in India have approached us, and currently our calendar is on waiting list of them. Very soon we'll be conducting programs for Tamil Nadu, for Gujarat, and for Tripura. As our chairman sir said, we would also love to do programs in Hyderabad. We are in touch with the commissioners there, with the people over there. In fact, I would say that your committee is today the most sought after committee by the government of India. When it comes to the issues relating to the GST, we are there to help you. We are there to solve your issues through the government of India. Friends, I greet the branch and thank them for organizing this program, which is the need of the hour, with only about few days remaining to file these important forms. Yes, I am confident that all of you will do your work diligently and carry over the task that though the government has not entrusted to us, the client has entrusted to us. With eminent speakers and senior speaker like Satish sitting there to guide, I am confident that all of us will go home with a lot of takeaways, with good amount of knowledge in this particular seminar that we are organizing. Thank you, Deepak, for organizing this, and thank you for inviting me. Thank you all. One more time, we'll certainly meet physically one more day. Thank you very much.
Thank you, sir.
I'm not able to hear anything.
Is it fine, sir, now? Are you able to hear? Yeah. Thank you, Rajendra sir, for your keynote address and taking us through all the initiative of Indirect Tax Committee. I'm sure that Indirect Tax Committee gets the laurel to the professions in the eyes of the government, and we are very much informed that the council at the head office level is doing a lot of informed, valuable value addition to the profession, and we look forward for all this information and the benefits which are being carried out for the betterment of profession. Thank you, sir. We are really blessed to have you virtually. Thank you for your address. May I now request our speaker, CA Irshad Mohammed sir, to say 2 minutes before we start the program formally as his address.
Good evening to all of you. Respected
so therefore, we have to proceed under the assumption that there is no extension that is going to come. And moreover, we are in the middle of some significant changes that have come up as far as return filing is concerned on GST and 9 and 9C that have come up in August. And more precariously, these changes contemplate the changes in GST and 9 and 9C for the financial year 21-22, when the clients have really not prepared themselves and neither the information is flowing properly in the returns. So in the middle of all this, the so-called paramount issues, we have to now deal with this GST or 9 and 9C return filing process. So we will try our level best to make sure you leave this space with more and more confident. I know you are all experienced. This is not the first time. We are in the 6th or 7th year of GST. And for a speaker, it's a very challenging to address an experienced crowd and experienced members like you, but we will try our level best to make sure you go from this place with full confidence. And we will also try to make sure we clarify all your Q&As at the end of the sessions. And of course, if there is anything that is there openly, please come out with all those issues. If you disagree on something, you please come out openly. We are open to listen to you and make necessary corrections if required. So with this brief introduction, I'll end my note. And last but not the least, I really congratulate Deepak for this wonderful initiative, need of the hour. And I hope more and more such sessions will be conducted in the future. Thank you.
Thank you, Irshadji, for your inaugural address. Now I request Satish Saraf sir, our second session speaker, to give insights on his topic. Thank you.
Thank you, Chairman. Very warm good evening to all my brothers and sisters. Dignitaries on the dais and off the dais. I see a lot of new faces and young faces coming into the profession, and I feel is a feel-good factor for a senior profession, seniors in the profession. And we look forward more fresh blood coming to the profession, and the professional will get more energy and more vigor to work hard and deliver the deliverables. Today's session till 5:45, Ishad will be delivering his speech on GSTR 9. Then followed by that, there will be a 15 to 20 minutes break. Then around 6 or 6:05, I'll start my presentation on GSTR 9C, which will take another 1 hour from there. Then at the end, around 45 minutes, we'll have a Q&A session. So please note down your questions, whatever you have in your mind, and maybe whatever you get during the session. Please make a note of those, all the issues which are coming into your mind. And initially, when Chairman Sir has called me and said that it is going to be a workshop for the annual returns, but later with the approval of the Institute Committee, it has been named differently. But we as the speakers, we have prepared as a workshop, but we will convert that into a discussion on issues in GSTR 9 and 9C. But let us see how best we are going to deal this. And I hope we are all going to have a good learning. Maybe a small doubt from your side may give a lot of insight for us to think also. So don't hesitate to ask the questions, but not in between while we are addressing you. Maybe we have dedicated 45 to 50 minutes of question answer session. So during that session, if you ask maybe a silly doubt, but it will be having a far reaching implication, so that please do not hesitate to ask, and then it will give a lot of energy for us and also to learn from you. So with this, I thank Hyderabad branch for giving this wonderful opportunity.
Thank you, sir. Now we formally start with the technical sessions with the end of inaugural session. It is my privilege to introduce our speaker for the first day, CA Mohammad Irshad Ahmed. CA Mohammad Irshad Ahmed is a practicing fellow chartered accountant with over 17 years of post-qualification experience. He exclusively deals in GST and related matters and is regularly engaged by large corporates, houses, government authorities, public sector units on tax consultation and litigation matters. He represents several clients before the tax authorities on various matters. He also handles international VAT assignments in UAE and other Gulf countries. Mr. Irshad is currently partner in MIA and Associates Chartered Accountants at Hyderabad. Prior to that, he has worked with KPMG and handled a variety of clients, including multinational companies in India and abroad, such as on sectors such as information technology, banking, large trading houses. Mr. Irshad is a member of Grievance Redressal Committee formed by Central and State GST Department, Hyderabad. He is also a member of the GST Committee of SIRC of ICAI for the current year. He is also co-chairman of the Indirect Tax Committee of Federation of Telangana Chambers of Commerce and Industry. He is also a founder member of the Confederation of GST Professional and Industries, Mumbai, a pan-India confederation of GST professional industries and association. CA Mohammad Irshad is also a regular guest speaker on GST at various forums, trade associations, professional bodies, including ICI, FTCCI, ASSOCHAM, ASCII, etc. on the indirect taxes. He has addressed several GST training officers under the certificate course for GST conducted by ICI across Telangana and Andhra Pradesh in the year 2017-18 when the GST was introduced. CA Mohammad Irshad is also a law graduate and regularly gives several representation and suggestions from the time to time to government on critical matters on GST, including trade and the economy. He is a guest faculty with NASIN, that is a part of CBISC, and has addressed several GST officers on various important topics. He is a member of the IDT study group on indirect taxes formed by IDTC Committee of ICI for the year 2016 and 17. He is also the member of the team which prepared the background material on GST by the Indirect Tax Committee of ICI in 2017, a very much popular GST reference material across various industry sector, government, departmentals, and professional India. With this, I welcome the speakers, CA Mohammad Irshad before the August audience, and request you to please take the session. I recognize the presence of our SICASA co-chairman, CA Saran Kumar Yu, to kindly occupy on the dais.
Yeah. So first is first, just few updates on the current applicability of GST on 9 and 9C. So the last date for filing GST on 9 and 9C is 31st December 2022. And the applicability is, this is just a refresher. I know most of you already know. So the applicability is starts from 2 crores turnover, aggregate turnover, and aggregate turnover is calculated turnover across India. So therefore the composition taxpayer registered in the composition scheme, GST 9 is not at all applicable to them. So, and GST 9C is applicable to those registered persons whose turnover exceeds 5 crore rupees. So up to 2 crores, nothing, 2 to 5 crores, 9, and beyond 5, 9 and 9C. And the GST rules have been suitably amended, notifying the continuation withdrawal of certain reliefs in the GST on 9 and 9C. And this is one of the most important topic, or one of the most important section that I'm going to cover, because every year they are bringing, they are making changes in GST on 9 and 9C. And the timing is very, I would say, excuse me, bad, because after the end of financial year and after expiry of 4 months, they are now notifying changes in GST and 9 and 9C. By that time, the taxpayers, of course, they don't have time to prepare during the course of the year. And of course, the consultants who are doing the work for them, it's a big challenge, because again, you have to go back to normal procedures for doing the working for 9 and 9C. And of course, 9C certification by chartered accountant is dropped, but I doubt if anyone is not working on 9C, because at least at my office, the work has not stopped. Although it's a big relief that I need not certify, but as far as my fees and work is concerned, that's still ongoing. And that I would say the trust they repose on the professional chartered accountants and the complexities that are involved in return filing aspect itself. So now the first and foremost, when we talk about the annual returns, this is not a simple form. Even GSTR 1 and GSTR 3B may be streamlined to this extent, to this day, but 9 and 9C is quite challenging. So therefore, we can't straight away open the portal and jump on filing GSTR 9 and 9C. There are a few things which you have to keep ready before attempting to file GSTR 9 and 9C. So for first 3 slides, I've kept for how you should be getting ready for filing GSTR 999C. So this is also very important reason is because this information may not be available with the consultant chartered accountant. So this information may have to be taken from the client. So before even attempting to file GSTR 999C or giving a deadline to the client, so make sure you first ask some critical information that is required from the client, and your clock ticks when the client gives you the required information. So what are the things that we should keep it ready before we attempt to file GSTR 9? So first and foremost, of course, is the audited or unaudited financial statements for the last year, because if it is more than 5 crores, 9C has to be filed. And when we are filing 9C, audited accounts have to be uploaded. Not only that, for reconciliation purposes, without audited accounts, it is nearly impossible to reconcile the various ledgers and numbers. And not only obtaining audit accounts, it has to be obtained along with all the ledgers. When I say all the ledgers, as you can see on the screen, sales ledgers, purchase ledgers, etc. and etc. Obviously, you may ask me, these ledgers are not available in the audited financial statements. Is it not? It's not available, no? You agree with me? So therefore, you have to take the tally backup, which is tied up with that audit. Most of the times what happens, practically I'm talking, most of the times what happens, the data is extracted from the tally, adjustments are made in the Excel, and then accounts are finalized. So there won't be any backward update in the tally. So therefore, your ledgers may not be updated. So it is very critical for you to obtain not only audit accounts, but the tally backup that went into the preparation of audited financial statements. Okay. So once you get the tally backup, make sure that numbers are tying up with the audited accounts, and then you can extract all the ledgers. This is very important. Don't take it easy, because unless and until you have this, you cannot proceed with filing 9 and 9C. In our office, we have done the filing, and you please let me assure you. So without this backup, you cannot do the reconciliation. This is very important. And extract relevant information in the manner which is prescribed and as it is required in 9 and 9C. This is also very important, because when you maintain tally, quite many of the times you may not maintain the sales ledger properly. People who file sales entries, they file by way of JVs. You agree with me? Have you come across? If you file an accounting entry or sales entry with a JV mode, Can you extract the information? Can you extract the information of sales on classified into B2B, B2C, gross, net, credit notes, debit notes? So therefore, it is extremely important. It is extremely important. The data which you obtain, whether in the tally or otherwise, is in this mode. You may tell me, sir, already when we are filing GSTR1, the data is already sorted out and the data is populated in GSTR9. Is it not? You may tell me. But again, who will cross-check? Because I have modified the data which is populated in GSTR9 while filing GSTR9. Almost in every client I have modified. How can I modify unless and until I know I validate the data which is populating in GSTR9? So therefore, the sorting out of data in this fashion is very important. Not only obtaining the data, but the manner in which data you have to get, that is also very important. So you have to put it on the client. If you're not maintaining the accounts, you have to make sure client gives you this information for the filing of GSTR9. And another important thing is adjustments recorded post financial year. As you know, when finalizing the accounts, there are many adjustments that go into finalizing the accounts. Just recently, we addressed one seminar. There, one member delegate was asking, they have reported 1 crore turnover in GSTR1 during the entire financial year. Now, while filing income tax returns, they have reported 3 crores turnover. Now, how can they report 2 crores turnover in GSTR9? Can you imagine the amount of adjustments that go post filing of GST returns? So therefore, the details of adjustments post filing of GST returns are very important. The details of those adjustments. And reconciliation between GSTR1, 3B and 3B versus 2 and TB. Of course, most of the reconciliations now you can do on the software. If you are using a good software, try to do reconciliations in the software itself. But I have come across cases where even the software is not working properly. But make sure to whatever extent you can do, you do to get comfort on the numbers. And the second point is very important because you see, when we come across sales data, there are various sources where we see the sales data, is it not? We can find sales in 1, we can find sales in 3B, we can find sales in GST workings that go into 3B. We can find sales in tally, we can find sales in audited accounts. So one sales figure you can see in almost 5 to 6 sources of information, is it not? So the thing is, the irony is the figures in all these sources may vary. In most of the cases, it will differ. And then you start scratching your head. So what is the correct figure and what you should do in GSTR9? So always keep in mind one thing. So GSTR9 and 9C is not a formality where you just file the return and forget about it. So most of the show cause notices that are being issued are based on GSTR9 and 9C. In fact, all adjudication proceedings would be based on 9 and 9C. So therefore, this is an opportunity for you to make necessary corrections in 9 and 9C. And you have to take this as an opportunity itself and make sure you report the factual and correct data in 9.9c. Forget about all these sources. No matter what information you have reported there, make sure if something new comes up at the time of filing 9.9c, that information is reported in these returns. So this we'll share the PPT. I've just narrated what the possibilities of transactions or mismatches that may undergo. You can refer it at a later date. We'll straight away go into the clause by clause, understanding. So what I'm doing, I'll speak in a basic language where the people, beginners who have not experienced GST9, they can understand how to fill up, and the experienced members who are looking into the issues, they can also understand, followed by some important updates table wise. So that have come in the financial year 21-22. So in case of outward supplies, so certain important points. So the moment you open GSTR9, you will see certain figures, is it not? On outward supplies, we will see. So how do you confirm the accuracy of figures, or do you have to confirm the accuracy of these figures, or you can straight away go and file the returns? You do have to confirm, no? You do have to confirm, no? So the various stages in GSTR9, and after 9, you have to file GSTR9C also. So therefore, the starting point has to be to confirm the figures which are auto-populating in GSTR9, whether they are correct or not. And important thing is what source is correct. I have come across a case where the sales figure reported in audited accounts is incorrect. Okay, overstated. What do we do? Things like that. So another important thing is registered persons having presence in more than one states. Okay, so multi-state companies who have presence in more than one states. What do we do? Prior to GST, there was no practice of preparing standalone and consolidated financial statements, because as per accounting standards, the requirement is only for listed companies, is it not? So for unlisted companies or companies who are not incorporated, business entities who are not incorporated in the Companies Act 2013, there's no requirement to prepare standalone financial statements. But for GST, you need to have standalone financial statements, is it not? So although it may not be certified by the chartered accountant, but at least the basic workings, having the standalone accounts tying up with our audited figures. So, and third point is very important, underlying the differences arising out of, due to accounting treatment. So the first nightmare starts when the moment you compare the turnover figure in GST 9 with audited accounts. It will never tally. If it is tallying, then you're the most luckiest person for that moment. So if it is not tallying, then what do you do? So one reason for that not tallying is differences arising due to accounting treatment. You have to understand. So the accounting treatment for reporting for income tax for Companies Act is different, and accounting treatment for GST is different. For example, discounts. Discounts are sometimes reported on the left side of the P&L, on the expenditure side. Sales is reported gross. In GST, always turnover is reported net of discounts. So immediately there could be a difference because of that. So another example is free samples given. Free samples is reported as sales in non-GST supply in GST. That will add up to turnover. Similarly, interest. Most of the times, the moment, the date when you're finalizing your accounts in July or October, the interest may not be available. Interest might not have been reported in GST R1. So to that extent, there could be a difference. So therefore, the differences arising due to accounting treatment has to be underlined, and you have to make a note of it. I'm just talking about outward supplies. And due to periodical factors, this is also very, very important. You should know, because most of the, as I've given my example in one case, which another member of audience reported to me. So post-March, there were additional turnover pertaining to the last financial year, but the turnover was not captured in the audited accounts, is it not? So therefore, there is a periodical difference of turnover between the data reported in GST R1 and populated in GST R9 vis-a-vis the audited financial statements. So you have to underline, make note of those differences also. So treatment, I will explain you what needs to be done, but insofar as understanding the data, you have to make note of it, is it not? When you see the difference is coming. Why the difference is coming? One difference is because of accounting treatment. Another difference is because the turnover is not reported in GST returns, but it reported in audit accounts. Okay, so things like that. And differences arising out of intercompany sales. When we prepare standalone accounts, we report sales made to the branches. In GST returns also, we report sales made to branches. We have to report, is it not? Each branch is treated as a separate unit, separate commercial unit. Therefore, in GST returns, to that extent, the turnover will be separately reported, whereas in accounts, that could be offset with the overall company's turnover. The differences will arise because of that also. And adjustments carried out in the next financial year, etc. and etc. So, and then the other points are differences arising out of treatment of reverse charge in books compared to the treatment offered in the GST. And bifurcation of turnover into gross of debit or credit notes. So the time is very short. The PPT is shared. I will just, trim down these issues. You can just ponder over it. I won't say look into it. You can just ponder over it. When you open your client, just think about it, whether these possibilities would be there or not. And interpreting as to what is non-GST and exempt or nil rated supply, because this time they have lifted this exemption, the relief has been withdrawn. So you have to report separately. And differences arising out of non-reporting of exempt turnovers. I have given you the example of interest. And HSN-wise supply, outward supply is a very challenging now. If you have experienced filing GSTR 9 and 9C for this financial year, if you have already filed 9 and 9C, you will acknowledge with me the fact that there is a big problem going on with HSN reporting of supplies, is it not? And reconciliation of tax payable as per taxable turnover versus declaration of tax paid in the GSTR 9. So we'll now go into the specific clause by clause analysis. So all these points which I have told you, you have to, before even attempting to file the return, you make sure you ponder over them, think about it, extract the information, keep it ready, so the life will be easy. So first and foremost, the supplies made to unregistered persons, B2C, have to be reported. Now I will give you one example. Now during filing of GSTR 1, what we have done, instead of B2B, reporting the transaction of B2B, you have reported under B2C. This is a very frequent query that is being asked to me at the stage of filing GSTR 1. Okay. So instead of reporting in B2B, you have reported in B2C. So your recipient was also, Pakka GST fellow who has not done 2A or 2B RICO, he has not come back to you saying that there's no difference in 2A. So what can you do now? What can you do now? Can you rectify that in GSTR 9? Any answers? Can you rectify? Can you rectify? Yes or no? Okay, so the answer is correct, partially correct. I would say you can rectify while filing GSTR 9. What rectification you can do? Whatever is not reported properly there, you can report properly here. Okay, but the problem is merely because you have reported that under B2B at 9 level, your recipient cannot take the ITC. Okay, so the short answer is you can rectify all mistakes that you have committed while filing GSTR 1, classification related or misreporting, etc., underreporting, overreporting, etc., and etc. Everything can be rectified here. But the problem is whoever could not get the ITC during that financial year cannot take the ITC at this stage. So my answer is simple. So you can remove that figure from B2C and you can report in B2B as far as GSTR 9 is concerned, so that for all practical purposes, it would be reported properly. And who knows, if some amnesty scheme comes and if they put a condition that if you have reported properly in GSTR 9, then we will allow the ITC to the recipient, then this will come as a handy to you. These are just screenshots just to show from where the data flows, but you need not see this because if you hover your mouse over the column, the boxes in GSTR 9, it will show you the figures, and most of the data that comes up here in GSTR 9 comes from GSTR 1, except the data on reverse charge mechanism. So the thing is, while filing one point, I will just state here, there is something called as sales gross, is it not? Gross sales, debit notes, credit notes, amendments in GST law. So you have sales, debit notes, credit notes, and amendments. So all these figures are different. Gross sales, debit notes, and credit notes. Okay. As far as GSTR 1 is concerned, these are reported separately. But when it comes to GSTR 9, in B2C, you can report net turnover. Only B2C, you can report net turnover. So when you go back to sales ledger, practically, if you have sales ledgers ready with you, and if that sales ledgers, you can extract how much is B2B, how much is B2C. The moment you extract B2C, you may get B2C gross turnover. You may get debit notes and credit notes. You can merge all of them and report in one figure. So that relief continues to be there in as far as B2C related nature of supply is concerned. But the thing is, you see, when you report GSTR 1, B2C large transactions are reported grossly, and credit notes and debit notes are reported separately. If you have large, more than 250,000. Okay, what is large? Large has been defined more than 250,000, because they would like to know who are these recipients who are having such a huge turnover and not having the registered number. So when you say B2C large, they will track the address of the recipient. So therefore, there is a separate box for that where you have to report more than 250,000. So in respect of those B2CL, you have to report gross sales in GSTR 1. The point I'm trying to say, in GSTR 9, all that gross debit notes, credit notes, they have to be merged and reported in this one single box. So suppliers, now we'll come to B2B. We are done with B2C. B2C is very straightforward with only one point to one frequent query that is being asked. If there is some problem with GST or one filing in 21-22 where B2B or B2B is reported in B2C or B2C is reported in B2C, can that be rectified now in GST or 9? Yes, that can be rectified with a disclaimer saying that the recipient cannot avail the input tax credit. So now B2B. So B2B, the reliefs have been withdrawn. Now, what are the reliefs that have been withdrawn and why it is very important for you to get the proper information? So supplies made to registered persons are reported in 4B. Table 4A and 4C of form GSTR1 may be used for filling up these details, but this is not our worry now because the technology has been taken to a next level where the data is auto-populated from 4A and 4C. Because 4B deals with, if I'm not wrong, 4B deals with your RCM supplies, okay, where the recipient has to pay. If you're a transporter, the recipient has to pay, or if you're say security services supplying company, the recipient will pay the tax, not the supplier. So then zero rated supply on payment of tax. So this may not be the case because we have the luxury of LUT. No one would be paying tax on exports except in minor cases where some people, they want to use the ITC or for any other reason. But by and large, mostly this column would be empty. But here the problem is, if people, if they have with payment of tax, without payment of tax, I'll tell you how the problem is manipulated in GSTR 9. Because when you go to GSTR 1, this data is extracted from one single box. It is reported in one single box with payment of tax, without payment of tax. Okay. For just beginner, export is zero rated supply, meaning you can export without payment of tax. Okay. So there is also an option. You can export with payment of tax by using the ITC. Okay, the two options are possible, and accordingly, the two they have to report it separately in GSTR 1, but in the one column, right? So now, but when it comes to GSTR 9, whatever you have reported on consolidated basis in GSTR 1, that has to be split in GSTR 9. So we come across several of such cases where the information which is reported on consolidated basis in GSTR 1 may have to be split at GSTR 9 level, and information which is reported separately in GSTR 1 may have to be consolidated in GSTR 9. So therefore, proper maintenance of books, or rather proper getting information in proper order, becomes very, very important in GSTR 9. So unless and until client gives you what is with payment of tax exports, what is without payment of taxes, you cannot fill up these details. So I've just given the screenshot. You see, this is how it takes. This is table 6A. In table 6A, there is an option of GST payment with payment of tax. There drop down menu. The moment you click that, you will get another option of without payment of tax. So supplies to special economic zones on payment of tax. This is separately reported in GSTR 1. And deemed exports, that is also separately reported. Advances is again very, very important because in GSTR 1, we have two important tables there. One is advances received but not adjusted, and one is advances received and adjusted. So when the advance is adjusted, the back-to-back tax invoice is issued and it is reported in 4 as a sales, is it not? So this table deals with those advances which remained unadjusted as at the end of the financial year. So why it is being asked? Because on this transaction, you have to pay the tax. Whenever you collect the advances, you have to pay the tax. That is the reason it has to be reported separately. Unadjusted advances. So I would like to draw your particular attention on the advances which are shown in the balance sheet, just to make sure. Because in our office, we will try to make sure at least wherever we review the balance sheets, unnecessary advances are not reported in balance sheet, so that you encounter these problems when filing GSTR 9. Trade advances. So inward supplies on which tax is to be paid on reverse charge. This is straightforward, simple, but it is not as simple as it sounds, because the problem is this is one exception to this entire table. This entire table deals with outward supplies, is it not? We are dealing with outward supplies. But the problem is this is an inward supply. What is the common factor between RCM and outward supplies? Precisely. So as a recipient, you have to pay tax here, and as a supplier, you have to pay tax there. So payment of tax is the thread that bonds these outward supplies and inward supplies due to RCM. And that is the reason this has been embedded into this table. But again, what happens when you do the reconciliation, you have to be very cautious. Most of the times the turnover, the total value which is reported on this table, if it is compared with your sales with audited accounts, it will not tally, because the value relating to inward supplies on RCM is included there. So therefore, there is a next table where the RCM value is excluded. So always that has to be compared. And then there's one more thing which you have to keep in mind. I have seen this: the data which is populating from 3B is automatically getting populated in supplies, RCM supply, inward supplies from unregistered persons. Because the notification has been withdrawn, even section has been amended. They only choose and pick few cases where RCM on unregistered persons is applicable. For example, in case of real estate, RCM on unregistered persons, you have to pay the tax, is it not? So in few cases that is applicable. By and large, it is not applicable. So if it is populating in RCM from unregistered persons, make sure you remove that figure and put it into the from registered persons. It will come to you, because not only here in 9, it is coming in 3B also from 2B, is it not? So sometimes what is coming, the finance department does not know. They also don't know. Is it not? So this is how it is shown here. Inward supplies liable to reverse charge. From here, the data is auto-populated to GST or 9. Yeah, so here the update is this relief was there. Like B2C, as I mentioned, in B2C, you can report consolidated figures, is it not? But in B2B, you have to report separate figures. Up until 2020-21, the relief was given where the consolidated report figures were allowed to be reported in B2B also, up to 2020-21. But from 21-22, this relief has been withdrawn. That is the reason in my opening remarks, I have told, if they would have withdrawn at the beginning of the financial year, then assessees and even the consultants would have prepared themselves for this challenge. But now they have withdrawn this. Now you have to report gross sales in the first table, which I have shown, and then followed by debit notes and credit notes. If you have reported debit notes and credit notes separately in GSTR1, the data will come to you automatically. If it is not reported, if it is reported on consolidated basis, the data will not come. Or if there is any problem, the data will not come. Or even if the books are not designed in that particular day fashion, it will not come. Okay. So like, for example, manual raising of invoices or passing JVs for issuing sale or for recording of sales transactions. Single account for ITC. So more on that when I talk about ITC. So things like that, you cannot really extract this data, is it not? How can you extract this data? So the government wants to report on gross basis, but when you maintain your accounts, you don't maintain in a fashion where you can extract the data on gross basis. So it's nearly impossible for you to file the return at this stage unless and until the client gives you the information in this fashion. So again, supplies are tax declared through amendments. Amendments here, it means simple amendments, clerical mistakes that have happened at GSTR1 filing level without involvement of the counterparty. Recently, someone asked me one query, what they have done. What they have done, they have issued B2C invoice. They have issued B2C invoice, and the party has also received the B2C invoice, and they have reported the B2C invoice also. The party has also taken. Okay, but party has received it, accounted it. There is a difference. When I issue B2C invoice, no. When I will issue B2B invoice, party has taken the credit as a B2B. But when filing GSTR1, instead of B2B, I have reported that under B2C. The error is more of an internal. You pay attention. The more is more of an internal. There is no involvement of the counterparty. Is it not? So now the second scenario is both are involved. Instead of B2B, I have issued B2C. So I was sleeping, he was sleeping. I have reported under B2C. So what do we do now? What do we do now? Can we amend it? No, it's not possible. It's not possible. That is, I mean, precisely that is the reason I'm trying to explain this point. Amendment is not possible. Amendment is possible in the first case where I've told you it is a more internal error rather than involvement of counterparty. When the counterparty is involved, how can you do it? It is very difficult. So the only option could be issue the debit note if you have timeline. But debit note will only multiply, no? So this I've already explained you, the relief on reporting of net of credit on debit notes which sales have been withdrawn. So this has to be reported on gross basis. So part two, section 1 was outward supplies on which tax was payable, including RCM, and part 2 deals with on which tax is not payable. There is a small amendment here. I will explain you. So the zero rated supply occupies a prominent space in this table. Zero rate supply exports without payment of tax, that has to be reported here. And supply to special economic zones without payment of tax, that has to be reported here. Okay. All these data come from 6B. The entire data comes from 6B. There also 6B, here also 6B. Only one table. Supplies on which tax is to be paid by recipient on reverse charge. So this comes from 4B. So you have 4A, 4B, 4C. 4A and 4C deals with supply to B2B, supplied through e-commerce. Through e-commerce. If I'm dealing with e-commerce, 4C applies. I will report there. Is it not? And 4B deals with reverse charge. My counterparty has to pay under reverse charge, like sponsorship. Okay, so all these details have to be reported here because I am the supplier of service on which tax is required to be paid by the recipient of supply under RCM notifications. So therefore, that has to be reported under this section without payment of tax. Yeah, so this is important here. Important because there is the relief has been withdrawn. You have these 3 sections: exempted, nil rated, and non-GST supply. So up to financial year 2020-21. So all these 3 categories of exempted supplies were allowed to be reported under one row. So similar reliefs are given. They have given reliefs like this. So you merge and report in one row. So up to 2021, they have given this relief. Though the partial relief has been withdrawn now. Now what they are saying, non-GST supply, you report separately. Exempted and nil rated, you report on combined basis in any of the row, either in exempted or nil rated. Okay. Just to wake you up from the sleep. So what is the difference between non-GST supply, exempt versus nil rated supply? There's a good example, sir. Yes. Yeah. Petrol and liquor, 2 prominent pre-COVID revenue generating products, commodities. Yeah. Pre-COVID and post-COVID also, no? Yeah. So what is the difference? Schedule 3, yes. So I'll tell you more from legal perspective. So there's a bit of anomaly in the law itself vis-a-vis the structure of the forms and the technology which is available in common portal. See, the definition of exempt supply itself includes all kinds of exempt supplies, including nil rated and exempt and non-GST supplies. Zero rated is totally altogether different. So the definition of exempt supply itself includes all these supplies. If you look at the definition, it says it includes nil rated supply and non-GST supply. So therefore, ideally talking, so everything should be included in exempt supply itself. For me, nil rated, exempt supply, non-GST supply, all are one and the same as per the definitions in the GST law. But when it comes to form, they have segregated this. So the practical understanding is exempt supplies are applicable to services, non-GST nil rated supplies are applicable to goods, and non-GST supplies are applicable to those transactions which are outside the purview of GST law, either because they don't fall under the purview of Section 7 supply or because they are triggered by Schedule 3 of the GST law. So therefore, any transaction for which there is no consideration, so it is not a supply. So therefore, it is outside the scope of the GST law. So free samples given, there is no consideration. Is it not? So it is a non-GST supply. So that is reported here. And those transactions which are levied to tax, but under Section 6 followed by notification 12 or notification 2 exempted. So they have to be reported either under the exempted row or under nil rated supply. Is it not? So that is covered here. But now again, so what difference it makes? I don't know what difference it makes. The relief has been withdrawn. I don't know why they have withdrawn. Really, I don't understand what they will achieve by withdrawing this notification. Maybe what I would understand, this is to analyze the sectoral aspects of the GST law. They would like to understand what are the sectors where the non-GST supply related transactions are escaping without GST. They may want to quantify they want to measure that sector by reporting this, maybe from that perspective. But again, it would attract maybe a simple penalty of 10,000 rupees, just in case if someone wants to levy a penalty on you. It's not a big issue as such. But again, from consultant perspective, just make sure you have to pop this into the mind of the client so that they'll restructure their books and subject to the fact that they will understand what is non-GST and ill-related supply. And I will ask you one example. What is interest? Is it a non-GST or is it a exempt or ill-related? Sorry? Non-GST? Exempted? Okay, good. Thank you so much. I really appreciate. Okay, so this is one practical example. You see what has happened. Non-GST supply like this, the figure will be auto-populated in GSTR 9. The moment you see, the figure would be auto-populated in GSTR 9. So why I am showing this? Now, the moment you revise that figure in GSTR 9, it will show in red color. But you do that. Don't worry about red color. Why I am saying you? Because in most of the cases, in every GSTR 9 that you will file, you will encounter this issue. Because I have told you earlier, the interest income or any other income that you factor in while finalizing the accounts will not be captured in GST returns. Is it not? So the figure populated in GSTR 9 may not capture that exempted supply. So you please capture in GSTR 9, because the moment you capture this, your total turnover will match with your GSTR 9C also. Okay. So don't worry about red lines. For people who think once the figure is auto-populated, it's a blessing from common portal, GST portal. So we should not break that blessing. So this is all open. Everything is open at this stage. You can do, undo, redo, everything, whatever you can do in GST 9 stage. So therefore you update the figures at this stage. So credit notes, of course, you can combine this. The relief is continued in case of non-payment of taxes. Credit notes and debit notes can be combined. Similarly, adjust amendments also you can combine at this stage. So this is very important. You make a note of it. Ultimately, you see 4N is gross, 5M is debit notes and credit notes, 4G is your RCM. So at this stage, RCM is excluded. This figure has to be, this should match with your audited accounts. Is it not? If it doesn't match, what will you do? Oh no, 9C, sir will cover in 9C. So I won't tell that. But make a note of it. This is very important, crucial. So after all the hard work that you undergo in outward supplies, this is the figure that you should make sure that ties up. So now we'll go into ITC, details of ITC for the financial year. So ITC is also very critical, and many times the differences will pop up. Very strange figures will appear, negative, positive, and it will allow you to file the return. It won't stop you. So you will ponder, you will be very happy. So it is allowing you to file the return, what to do, is it not? So in ITC, primarily the intention is to two-tier authentication or two-tier verification. One is the number verification. The ITC that is popping up in GSTR 9 has to be tallied with the ITC which is sorry, books of accounts. Any other answer? Which is appearing in audited accounts. Will it appear in audit accounts? Will it appear? Not appear? It won't appear? Okay. It may appear, no, in current assets. Is it not? Current liability also it may appear. It won't appear. Okay, let's say, okay, fine. To some extent, I'll agree. This ITC may not appear what we are doing, we are trying to understand the number here. We are trying to vouch the number, verify the number, make sure the number which is coming up is correct or not. It's very challenging, by the way. So, okay, let us assume that it is not showing anywhere in the, you go to the schedule of current assets, you see that you are seeing the primary group as duties and taxes. Within duties and taxes, there could be anything. PF ESI may also be there. Okay. So now let us go to Tally. If we have gone to Tally, so there in Tally, you will find ITC ledger. Do you think you are going to find any solution there? Are you going to find a solution there? How your ITC is ledger? I have come across cases where with having 20 crores, more than 20 crores turnover, they are maintaining one ITC ledger. Everything is dumped there. No CGST, no SGST, no IGST. Can you understand? No CGST, no SGST, no IGST. Everything is dumped in that entire ITC ledger. Forget about RCM. Forget about ineligible ITC. Forget about Rule 42 reversals. So one column is maintained for ITC ledger. So therefore, the ITC which is popping up in GSTR 9, which is coming from table 4 of GSTR 3B, has to be cross-checked with your books of accounts. By the way, the ITC that comes up in GSTR 9 could be gross, could be mixed, could be partially gross, partially mixed. Can you imagine? Because of whom? Because of our sins, whoever has filed the return. Understand, no? And why do we file the return? Because we maintain the ledgers in that way. But here, when it comes to GSTR 9, you will see in subsequent slides, the GSTR 9, ITC figure has to be reported on gross basis. Okay. So therefore, authenticating the figure of ITC is very important, followed by bifurcating the ITC data into the different categories into capital or input services. Okay. So these are the two primary purposes for validating this ITC data at GSTR 9 stage itself. Okay. So I've listed the reasons why it will happen. ITC recorded in books could be net of reversals, treatment of ineligible ITC. You might have got calls from state GST also asking you to reverse the ineligible ITC. Most of them don't know what they are asking. And the persons who is receiving, state government officers. And sometimes the person who is receiving, he may also not understand. So each other, they will confuse each other, and at the end of the day, nothing happens. Is it not? So therefore, I will just throw light, jokes aside, I will just throw you light on what their real intention is, what they are intending to really achieve this, or what they want you to show there. And treatment of reversals in ITC in GSTR 3B versus books of accounts. And another challenge is non-availability of information on ITC, on capital goods, inputs. And this is also very important, is it not? So when I have told you one example, only one ledger is maintained. Okay, fine. Someone is better. He is maintaining 3 ledgers: ITC CGST, ITC SGST, and ITC IGST. Okay. Even someone is much better. They are maintaining rate-wise ITCs, 5%, 12%, and 18%. But have you come across anyone maintaining capital goods ITC and input services ITC? So big corporates also. Let me just tell you, sir. I have seen the SAP. I have seen HANA. Some HANA has come in SAP. So they are more disastrous than Tally. To be very frank, I have come across reports. Where maybe they are at developmental stage or what stage. But for a third-party consultant, it is very, very difficult for them to read those reports. Only people who are accustomed to it, who are doing it, they may be able to understand. But when you really extract the reports from these systems and present to the tax officers, it's really difficult to read these reports that is extracted from ERP systems. Whereas in Tally, I have come across cases where it allows you to maintain at whichever micro level you expect. So if you want to create separate ledger for capital ITC, you can create. For input, for various classified rates, you can create, and you can pass entries also. There is a possibility, provided there has to be someone who is willing to do that. Okay. So anyways, in the absence of the information that is not available from the tally, then the only thing which we have done, I will share you from fixed assets ledger. Individual ledgers have to be extracted. There the ITC has to be done, extracted, and then put that capital ITC there, reduce it from the total ITC. It is doable. It is doable, but that is not the solution. So how much time will you spend for the given fees on one return? That is challenge, no? So if information is readily available, you can file the GST or 9. If it is not really available, you will end up spending time equal to 2-3 returns filing for extracting one single information. That's a big challenge. So 2A, 2B reconciliation. This is also a very important challenge. I will just tell you when I go to that particular section, why for this financial year, this is a big challenge. I'll just tell you. And what you have to do also, I will tell you, not only challenges, I will tell you the solution also. So ITC differences arising out of periodical factors. This is also very important. Someone asked me a question during my last session. What about 2021 ITC that is taken in current financial year? How would we have to reconcile? And what about the ITC that is for this financial year taken in the next financial year? I'll just try to explain how that has to be dealt with. And non-identification of ineligible ITC in the book. This is also very, very big problem because everything is ineligible ITC. What you will do? Ineligible ITC. Where can we find? Sorry? No, in accounts. Where can you find? Nowhere is the right answer. Why nowhere? Yeah, P&L. Yes. Yes. Thank you. Really appreciate. So P&L, everything is debited, no, along with the tax. So how will you have to extract it? You cannot extract it. So therefore, you scrutinize the P&L, identify the items which may be subject to ineligible ITC, say repairs to buildings, or staff welfare. And I'm just narrating some of the most popular P&L heads that may have ineligible ITCs, or tours and travels, hotel expenses. Is it not? Yeah. So things like that. So you have to identify through P&L. Maybe at this stage, you can extract up to 80% accuracy. Even that is good. So that is the way out. But again, I've told you how much, to what extent, how much you will you spend, how much time will you spend on one particular return. And this challenge is in computing the eligible ITC. So only ITC, you will face these many challenges. Now let us go into the return filing aspect. If you look at this table 6A, total amount of input tax credit availed through form GSTR 3B. So the data is populated directly from GSTR 3B. 3B 4A. I just bought this 4A. You see that 4A is extracted. Not all other ITC, but the combination of all 1 to 5. The combination of all these rows from 1 to 5. RCM is also captured, and other than RCM is also captured. Import of goods is also captured. Import of services is also captured in this particular row, in this column. Everything comes here. Whatever you have reported there, that will come here. Okay. So if you have reported net here, if you have reported net ITC there, net of reversals, because reversal column is next to A in the B. By any chance, while filing GSTR 3B, or maybe by more chances, if you have skipped reporting net ITC in B, so it will be netted off in 4 itself. You can do that way also, no? That is number 1. Number 2, ineligible ITC. Ineligible ITC, what will you do? There are 2 ways of reporting ineligible ITC. You report gross there, you reverse here, and again report in ineligible ITC. 3 places you have to report: gross, reverse, and then ineligible ITC. That is one way. Second way is don't report anywhere in A and B, report only in D. That's second way. So accordingly, the information is populated here. So when the information comes here, you should know that figure which is coming here, whether that is gross, whether that is net, or that is partially gross, partially net, or whether it includes ineligible ITC or not. Is it not? Do you have to know or no? 100% you should know. To that extent, you need to have control over the figure at the stage of filing GST R9. I have bought the new 3B extract also. Maybe later stage, I'll just show you. This has undergone change, but that change will not be applicable for GST R9 filing purposes. For 9, for this year at least, only this format is applicable. Okay, so another thing is, so now this I have told you, the extracting information is a big challenge. You have to know what, see, the question is, what I have to report here is secondary question. What is coming here, finding out, is the primary question that you have to seek answer. Is it not? So for the first row, you should understand what I have told you. Then you go to subsequent stages. Having ascertained this figure, you have to classify that into these 3 categories. There was a relief up to 1920. 2021, they have withdrawn. This year also, the withdrawal continues. Inputs, capital goods, input services. Capital goods have to be reported separately. Inputs and input services have to be reported on combined basis in any of the column. So what is the difference between input and input services? Any one answer? True. Thank you so much. So for beginners, inputs means goods, input services means services. At the end of the day, both are inputs. Inputs could be either goods or it could be services. Can there be any other third category? Is there any third category? There is no capital goods. But you will say that is also goods. Yeah? No, give goods. Capital goods is also goods. Goods only. There's no definition. Only thing is, it says capital goods are goods, those are capitalized in the books of accounts. So therefore, the entire ITC, whatever that comes, has to be split into this into 2 components. One is capital goods, one is inputs and input services. Input services then we can be clubbed and reported in any of the column. And I have told you how to extract this information. Capital ITC ledger will not be available in most of the cases. You have to depend on fixed assets register or fixed assets schedule in audited financial statements. And I won't be surprised if you say my fixed assets registers additions are not tying up with my tally accounts. That is possible also. Okay. But you have to find a way out how you will do it. But make sure you don't report ITC on passenger vehicles. What will you do? Passenger vehicles? Reverse. What will you do here? What will you do here? One answer. No, here. How do you report here? Capital goods. Any other answer? So my answer depends on what I have reported here. As I have told you, ITC on passenger vehicles is barred from ITC. It is blocked. Is it not? It's not allowed. So that some people will report net. They won't report at all. They will report gross and they will report as a reversal. Is it not? It is possible, no? If you have reported gross, then it will come here. It will come here. Is it not? If it is coming there, then you have to report here. See the amount of work. Can you understand? See the amount of work that you have to do. So inward supplies received from unregistered person. This is what I was saying. The auto-populated figures comes here. I have seen. If you have not seen, then it's fine. Okay. But I have seen they are coming up here. I don't know if it is because of software or because of common portal or 3B. I don't know. But if it is coming here, unless you are a real estate, you may continue this. If you're not real estate, you remove this and report here from registered persons. Again, classified into these 2 components, inputs and capital goods. And ideally, this should tie up with your liability also. And import of goods, it comes from IceGate portal. Okay. So there's no problem with that. Import of services purely at the prerogative of the registered persons. Is it not? It is done on self-assessment basis because services come from the sky. There are no borders, there are no ports, nothing. So if there is some service imported, only the assessee will know. And on self-assessment basis, the ITC has to be paid on reverse charge and ITC has to be availed. So it has to be reported here. So amount of ITC reclaimed under the provisions of the Act, this is that 180 days reclamation. It's a wonderful benefit that you have. Just in case if any of the supplier is not paying, or if amount is not paid to the supplier within 6 months, if you know any such suppliers to whom, in most of the cases you don't know to whom payment has been made, to whom payment has not been made. Unless people call and ask, our payment has not come, payment will not go. Is it not? So therefore, unless and until you know, then you have to reverse this ITC and then you can reclaim even after 50 years. There's no problem with that. There's no bar on reclamation because of this 180 days. So transition credit window is now closed. But if it has been availed during that particular time, then that can be availed. So now comes reversals. Yeah. Any other ITC availed but not specified over. This is a residuary clause. This is a residuary clause. Is there any other ITC? Because I was also just thinking, from form ITC 01 and form ITC 02 in the financial year shall be declared here. Okay, so I've specified here. So then comes to reversals. See, again, this reporting is dependent on the first row. First row, whether it is gross or whether it is net. If it is a gross, then you report here. If it is not a gross, then you can't do anything. Is it not? Because that row is freezed. It is auto-populated, but that has been freezed. Cleverly, no? So they're very particular about ITC. So as per 37, 39, 42, 43, as per 17.5, etc. and etc., they have to be reported. But there is, I think, some relief available here. If the amount stated in 4D was not included, yeah. So this also they have clarified. Like I've just explained you. This 7E I have explained you. What they are saying is what I have told you. So whichever methodology you followed in 3B, reporting gross, then reversals, and then reporting in eligible ITC. If you have followed that methodology, you report here. If you have not followed that methodology, then don't report here. That is the relief they have given. Understood, no? So if you have followed that methodology, report gross, reversal, and then ineligible ITC. If you have not followed that methodology, don't report there, report only in eligible ITC and close the matter. Yes, this is the new form that has come up now. From which month? Any idea? From August. Yeah. From August it has come. So this they have brought in changes in 42, 43, and 17.5, and there is others. And then there are other details: ITC reclaimed and ineligible ITC. This is more from the perspective of sharing of revenue by the state governments and the central government. But but this is not applicable for filing of GSTR 9 annual return for financial year 21-22. Just a clarification slide which I have inserted just to make sure, since this amendment has come, do we have to do anything on this? There is nothing that you need to do insofar as this aspect is concerned. Now comes to one of the most important turning point of GSTR 9. So ITC as per GSTR 2A, table 3 and 5 thereof. See, this is GSTR 2A. Table 3 is inward supplies received from registered persons other than supplies attracting reverse charge, and debit or credit notes, including amendments received from current tax period. Is it not? So, see, up to 2019-20, 1920 and 2021 also they have given the update. What they told, the 2A will be updated, because what happens the moment financial year ends, then we have up to 6 months window, 6 months, 7 months, or 8 month, controversial 8 month. We have a window where you can take the ITC belonging to last year. Is it not? You can take the ITC belonging to last year. You have that window. So they have given the clarification saying that we will update the 2A with all the inward supplies which has been reported by the suppliers up and until September or October or November, whatever. November, of course, the portal is blocked up to October. So we will report. But this year they have not given the update. And I have also not checked. But here the problem is, you see, in 2021-22, what has happened up to December 2021, 2A was applicable. From January 2022, 2B was made applicable. So what the difference does it make when we file GST or 9? It does make a difference. How? When you download ITC ledger from Tally, you will download ITC ledger from the Tally or from SAP. You will get all purchases, all inward supplies for all the 12 months. Is it not? So now, let's say from 2A also you have downloaded from 2A, the 2A which is available from the portal. So the question is, up to December 2021, whatever purchases you have made, even if the supplier reports up to September or October, you are eligible to take the ITC. Is it not? Because 2B was not there. When 2B came, you can take the ITC only in the immediate next month or in the month only when they have reported. If they have not reported up to March, then you cannot avail the ITC in that financial year. You agree with me? You are following what I'm saying? For Jan, Feb and March, if the supplier has not reported, let's say, hypothetical, if they have not reported, if it is not populating in 2B, you cannot take that ITC. Is it not? But when it comes to GST or 9, the peculiar problem is the 3 months ITC, which is barred, which has not been reported, and the 9 months ITC, where you can avail, even if it is reported subsequently, is coming here. And you have to segregate it, understand what is coming and what is not coming, what is to be taken and what is not to be taken. So this is one issue here when it comes to GST or 2A. But what we have done, another issue which I have also seen, somehow I have seen this credit notes and debit notes not getting netted off. I have seen. See, thank you. Someone is there to confirm my understanding. So the gross figures are coming in 2A. I don't know what is going on. And then you see no update has been, I've mentioned that no update has been provided for financial year 2021-22. So silently there is no update. So we cannot rely on this 2A data, 2A number that is populating here. At least I am not relying. So then what I'm doing, what is the solution? So we have done independent reconciliation of 2A and 2B repos. We have done independent reconciliation. We have all the data as to who has reported and who has not reported. And whoever has reported, that data is matching with my audited accounts. And that data is coming in my 4B, table 4 of 3B, which is getting auto-populated in GSTR 9. I am comfortable with that figure. Although that figure is not matching with my 2A. So even if it is not matching, because I have done my independent reconciliation, and if there is some inquiry at a later date, I am in a position to explain them with factual data. As we have explained earlier also, when the figures were not matching, as you might have faced now notices, when they inquired you, you have submitted, you have explained them, then they have accepted. Even though the figures are not matching in the auto-populated figures are not matching, they have accepted. Similarly, the solution is you do the independent reconciliation, bypassing these figures which is coming in GSTR 2A, at least for this financial year, and make sure if you are confident about the figures, you continue taking that ITC. So there is other ITC related information. ITC as per sum total of 6B and 6H is your gross and net. Earlier populated from GSTR 3B, it is comparing. It is now comparing with GSTR 2A. Okay. So after comparing, what it will do? It will show you the difference. A minus B plus C. What will you do with the difference? So there is some difference that will come up. Either it could be negative figure or it could be positive figure. It could be negative or it could be positive. Positive is something else, east. Negative is something else, west. What do we do? It is asking you to reclassify them into ITC available but not available ITC available but ineligible. See, for example, hospital. For example, hospital. Hospital has pharmacy, which is taxable. Hospital has IP related consumables, which are exempted. But pharmacy purchases ITC and consumables related ITC all will come in 2A, is it not? And that figure will come there. So unless and until you are confident that this particular ITC pertains to consumables relating to IP services, you should not put here. Then only you should put what is ineligible. If you are confident that ITC which is coming there, out of that ITC, to this extent, the ITC pertains to so and so ineligible credits, you can report here. Unless you are confident that I got the excess ITC, but I have not availed due to some reason, like B2C, B2B, which I have given you the example, I have not availed. So you have to put here. But strangely, even if you don't put here, it will accept the forms and will ask you to, file the return. It won't stop you from filing the returns. So lastly, also it will say a total ITC to be lapsed in the current financial year. I don't know why it says like this. Because at the end of the day, it is not blocking you from filing the return. Whether I put, whether I don't put, whatever is supposed to be lapsed, it will lapse. Is it not? So when you put there, are you admitting? Are you admitting that my ITC is lapsed? So unless and until you are confident that a particular ITC, which is supposed to be taken by me, availed by me in credit ledger, but I have not availed it, unless you are confident, you don't put here. Because lapsing, when you are putting here, you are admitting that to that extent the ITC is being lapsed. So it is very difficult, I am saying you, to classify the ITC related information, finding out of the total dump, what is ineligible, what is eligible, and out of eligible, how much you have taken, how much you have not taken. And if a client says why it is lapsing, you are filing my returns, so have you not taken the entire ITC, then what answer will you give? That is also an issue, no? So therefore, unless and until you are confident about these figures, you report. Otherwise, even if you don't report, it will not ask you, it will not block you from reporting. But again, one thing is there, because so far I have not seen notices coming stating that. I gave one example also. For example, you see this example here, or rather this example. No, this example is better. So you see 3,000 is there, 2,500 and 2,500 is the ITC claimed by me in GST returns, and 1,000 ITC has been claimed by me in subsequent year after March. Okay, so I'm just classifying my ITC into two components in my books, in my GST returns. Out of total ITC for any financial year, see, pay attention. I'm getting all the entire ITC in 2A or 2B for a given financial year. Is it not? But when it comes to taking ITC, what I have done up to March, I have taken some amount, and after March, I have taken some amount. Next 6 months, I am allowed to take, no? So that is what I have shown here. 2,500 I have taken in the current financial year, 1,000 I have taken in the next financial year. So therefore, what I am saying, I am taking excess ITC here to the extent 3,000 is populating in 2A, 500 is excess ITC that I have taken. What I am trying to say, it shows negative figure. That means I have taken excess ITC somewhere in my returns. Even then, it allows you to file the return. It won't prompt you to pay the tax through DRC 03. And I have not come across notices on this particular point saying that there is an excess ITC. I have not come across. If you have come across, you can enlighten me that this excess ITC has been availed. Though this is the only issue that I foresee here. If there is a negative figure, there is excess ITC that has been availed in the returns, and then despite this, you have filed the return, then it is possible that there could be an inquiry saying that in your returns, you have availed excess ITC vis-a-vis 2B. So therefore, you are supposed to repay this tax. I have given example, PPT will be shared. You can just take a look at it if you require any additional support. So these details of tax paid as declared in returns filed during the financial year. Now see, this is also very important point, tax payable. Tax payable is modifiable data. You can modify this. I will tell you where you can use this. Paid through cash, paid through ITC is freezed. Paid through cash, paid through ITC is freezed. I gave you one example, no? 2 crores versus 3 crores. Whether he has issued e-way bills or not issued e-way bills, that is another aspect. But he want to report his turnover like VAT. So if he is reporting turnover in B2B or B2C, then there is a resulting liability. Let's say if it is 5% on 2 crores, it would be 10 lakhs plus 1,80,000 interest. Okay, 10 lakhs plus 1,80,000. So what you should do in all those scenarios where you are discovering an additional outward supply that has not been reported in GSTR 1 or subsequent returns and has to be reported in GSTR 9 and reported in GSTR 9, and the resulting liability has to be modified as tax payable in column 1. So to that extent, there will be an excess tax payable that has to be paid through DRC 03. Okay. So why they have given this option of modification, you can update this. Yeah, part 5. In our last session also, quite a lot of queries have come up. People were very eager to ask, what is this part 5? It continues to be a mystery for me also. And it continues to be a mystery for the professionals who are doing some good work in state GST on show cause notices, because last time they tried to do something on this, but they miserably failed because they tried to recompute something based on this formula. See, this is a half-baked cake, this particular section. If you look at this section, it says particulars of transactions for the financial year. It uses the term financial year. Okay. So which financial year so assumption is it's 21-22. Now come down, supplies or tax declared through amendments, and then reversal of ITC availed during previous financial year. It says previous financial. It uses the term previous financial year. So next is previous financial year. What does it mean? Then the notes are different again. If I have to assume, what I will assume, financial year means 21-22. Previous financial year means I will assume 20-21. If you go by their notes, financial year is 21-22. Previous financial year is also 21-22. And this column is meant for 22-23 reporting. So that is the reason why they could not, the show cause notices also, they cannot formulate. And these last 2 months, they have given the relief, saying that it is optional. You need not report the data for last 2 columns. As far as reporting of this information, you need not report. So therefore, there is no clarity. I don't want to put in my judgments here, assumptions here. I don't want to state anything because I myself not clear on what exactly they are intending. Because if I say that ITC relating to financial year 21-22, but reported in 22-23 has to be reported here, then immediate question from someone would be, what about the ITC reported in 21-22 for financial year 2021? Where will you report? That is coming up now in 4B. So therefore, these issues will manipulate. So I'm not attempting to really deliberate on this. Try to escape it. So of course, this is optional anyways. Supplies or tax declared through amendment, this can be done. This can be done. Net of debit notes, net of credit notes. These are all those outward supplies which were not reported in current financial year, but reported in subsequent financial year, that can be reported here. But ITC, be very careful. So I've given here of the points are also given. You can take a look at it. And for reversal of ITC, they have given the option not to fill this table, and you can escape it. Yeah. So the last point is this HSN-wise supply of outward or inward supplies. See, for financial year 21-22. Now, just to update, this is a recent update. What they have done, you might have also noticed, while filing monthly returns, 4-digit HSN code is mandatory up to 5 crores turnover, and turnover after 5 crores, 6 digits HSN is mandatory. So the difficult thing is they should have made this prospective, but what they have done, they have made it retrospective. So I have come across situations where, since it was optional for the entire year of financial year 2021-22, most of the clients, most of the registered persons, what they have done, Whichever way they understood, they have reported. 2-digit HSN. 12% HSN reported as 18% HSN. HSN, which cannot be quantified in bags, but can be quantified in bags, but reported as numbers. So in whichever way they have reported, it's not their mistake, because government relaxed HSN norms. Therefore, while filing GSTR 1, so now what happens in GSTR 9? What happens? The data itself is not available. HSN data itself is not available. If you ask a client what he will do, he will ignore what you are asking. He will tell you when are you filing GSTR 9. Is it not? That is the meaning. That is the meaning. He won't ask you, because the moment he asks you, you will ask him to pay additional fees. So he will only ask you when are you filing GSTR 9. So the only way out is, if you have multiple HSNs and multiple rates, it will be very difficult. Very, very difficult, because no one has this data. And if your books of accounts also, I doubt if they have a good quality data, then you have to recalculate it. If you are unable to recalculate, then I should not say this, but I'm saying this. Whichever best way you can put, you put, and close this matter. That's the only solution we have. And irony is, even if there is a fractional difference, it is not accepting. At least that relief they should have given. Anyways, we'll also represent that relief they should have given. Is it not? Is there anyone who is facing 9C filing issue, where the figures are tallying with 9, but it's saying there is an error? Is there anyone facing? No one has attempted? No. So anyways, I have mentioned this. But there is one relief here. See here, you have to report HSN-wise supply of outward and inward supplies. For outward supplies, the relief has been withdrawn. First of all, HSN amendment has come. In monthly returns, you have to report, number 1. Second, the relief in 9 also has been withdrawn. For last financial year, you have to report outward supplies, but the relief in respect of inward supplies has been continued. So this is in tandem with GST or 9C also. There also it is continued. I won't talk about clause 44D of form 3CD of income tax. Strangely, these have originated from GST, but income tax people were meticulously following clause 44D in 3CD. I don't know how they will follow. When GST, the place of origin is giving relaxation, who is income tax to really ask you to file the data? Okay. So payment through DRC 03, if there is an additional liability, there is a good occasion, you pay through DRC 03, you can escape from penalties. Okay. Some useful tips I have mentioned. I need not say this, but I'm done with my presentation for time also. Thank you so much for your patience and for not sleeping. Thank you so much.
Thank you, Ishat, for your wonderful session, and one more round of applause for Ishat. Friends, we'll break for high tea and we'll reassemble after 15 minutes. Thank you.
Tax liabilities and go by weekly. That is the biggest saving response. तो वहां से कॉल पे जो बढ़िए बता
If there is an excess liability, then we said, but in your facts, what was that? Was reversed in 2021. So because of this reason, the ITC got unstable. There is no ITC. There is no ITC. So because of the reversal, I might have paid in cash. While offsetting free, there is a liability. So what is there is no liability in that. What is that is the only liability. So we paid it. So that has come as an liability. I need to change. I need to increase the liability. No. I will make it because the part 4 is part 5 that is meant for that is not meant for all your adjustments for previous year or next financial year. For adjustments, table 12, 13, 14, which I have told you. That is meant for that, but it is not perfect. So the scheme of this GST, they have given all stages for current financial year information. For any period for the district. Their reasons of this. Yeah. That Mr. Satish, you asked me. Next session. చెప్పండి. నేను చేయకూడదని చెప్తలేను కదా నేను.
You have to come once every moment because the office will verify the attendance. If person has played or not. So you can pay rest of all the meetings fund. Told me you can pay the rest meetings and one meeting so we can attendance meeting
Hello. Thank you, friends. I welcome you all to the second session of of the day seminar on annual returns in GST. May I now request speaker of the day, say Mohammad Irshad sir, to come on to the dais. May I now request Satish Saraf sir to come on to the dais. Sir, the initial 2 hours just went like that. I had already feedback in the session that it was a very good session and lot of practical aspects you have told on GSTR 9. Now, as per the schedule, we have a time for GSTR 9C, which another renowned expert speaker will take us through the GSTR 9C reconciliation statement. So before sir take it over, it is my privilege to introduce CA Satish Saraf sir before the August audience. As CA Satish Saraf sir is a practicing chartered accountant at Hyderabad since 1999 and having experience of 23 years in various specialized fields of goods and service tax. He is a graduate of commerce and graduate of law from Usmania University and fellow member of ICAI. He is director at H&S Tax Advisory. Sir, let me have that privilege. H&S Tax Advisory Private Limited and partner of Satish Saraf and Company Chartered Accountants. He was coordinator for technical guide on sales tax audit in the state of Andhra Pradesh, published by ICAI in the year 2000. He was a convener of Hyderabad study group on GST constituted by Indirect Tax Committee of ICAI. The group has prepared part of the background material on GST law published by our institute. He was also the managing committee member of Hyderabad branch of SIRC during the year 2007 and 10. Hyderabad branch of SICASA was awarded best branch during his term as chairman SICASA. He was involved in identification of GST faculty for the Indirect Tax Committee of ICAI. He has been entrusted a job at Hyderabad, New Delhi and Mumbai. He presented more than 300 technical papers at various forums of including national conference, mega conference, corporate forums and other seminars across the country. His article titled GST Tool for Development of Society, published in Chartered Accountant Journal of ICAI in the year December 2021. He was columnist on GST Inadu, Telugu Daily. He represented the Institute of Chartered Accountants of India in Telangana State GST Grievance Redressal Committee for the year 2020 and also 21. He is also special invitee to the Indirect Tax Committee of FTCCI for the year 21-22 and 22-23. Recently, jointly authorized a book on GST for Commerce graduate on Usmania University, Theory and with the title Theory and Practice of GST. He is a member of GST and Indirect Tax Group of Board of Studies of ICI, which has decided the syllabus of new curriculum. And this group is also involved in the preparation of study material for CA Inter and CA final examinations. With this brief introduction, I present before the august audience CA Satish Saraf sir. Sorry. May I now request Sharma sir, Shastri Sharma sir, to present the sapling to the speaker.
It's a great privilege for me.
Thank you, sir. Over to you.
Thank you, Chairman, for good words about me. How many of you listening to me first time? Oh, quite a number. So introduction was required. Very warm good evening to my brothers and sisters of Hyderabad. I thank Hyderabad branch for giving this opportunity to stand in front of you and speak on the GSTR 9C return. Before I go into the topic which is given to me, I have wanted to communicate certain things to you. In the recent couple of months, the state government is making hue and cry and saying that you please fill the GSTR 3B return properly, and wherever the reversals are there, please put the data in 4-2B column such that they'll get the credit, or from the pool of IGST, they'll get the proper credit. For the year 17-18, they should get 617 crores of pool, but because of wrong reporting by us, they get only 17 crores. So the state government is losing revenue. Now the compensation cess for the first 5 years is over. So now that honeymoon period is over, now they should get the revenue. So to increase their revenues, this is one of the area where they are saying that you please put the reversals under IGST in box 4-2B of the GSTR 3B return. That please make a note while you are filing your GSTR 3B return. And in the past, those who are seniors here, they recognize, they say that in good olden days, the income tax returns used to be processed manually by the income tax officer. So if you file on say 30th September, there will be a bunch of returns. They'll possibility of skipping their eyes and you not get scrutiny. So in those days, on 30th September only, people used to file the returns. That was the logic in those days. But now each and every paper and each and every return is processed by system. So now there is no fun in keeping the things pending till the last date. So please start from the day one only itself, not wait till the last day. So for filing 3B, by 14th, you'll get the data, or 15th, you can start filing it. Why don't wait till 20th? That's what I want to say. Because the complexities in the law are getting day by day increased, and we have limited resources, and nowadays getting articles also is getting difficult task. So keeping all that in mind, better you start compliance from the day one itself. And while preparing balance sheets, say for filing income tax return, or maybe for ROC filing, or maybe for any other statute, at the same time you prepare data relevant for GSTR 99C also. So you make a reconciliation, then prepare the balance sheet, then file it, then your income tax return, your books of accounts and your GST will match together. Afterwards, it is very difficult. So please, maybe next year onwards, we can plan that. And one good news for the profession, in the year 2021, around 1 lakh notices were issued by the state government of Telangana in that prefixed format with the help of IIT Hyderabad. So out of that, 16,000 notices were repeatedly given in 2022 in the month of February or March 22. So all those things are now seeing the light of the day. All those notices has to be completed by way of orders. So the government has woke up and they are going to pass the orders and they are going to give us the personal hearings. So maybe after 31st, they'll keep us busy. We are planning that 31st December is the last date for GST and income tax both to put together. From January, February, March, we don't have any work. But thanks to the God and thanks to the state government of Telangana, now we are going to get the work for February and March at least. And for the year 2017-18, the due date for filing of GSTR 9 was 7th February 2020. So from there, 3 years of time limitation for passing the orders. So before 6th February 2023, they have to pass the orders. Now we're in fag end of the December. So just we have only 40 or 50 days to complete that process. So we are going to get some more additional revenue from this assignment. With this, I want to start my presentation. After guidance of and advice of and help of Rishad Bhai, now we could able to file the GSTR 9 successfully. Now the task is to file GSTR 9C, which is given to me. I think I'll be able to complete with your help. GSTR 9C is governed in section 44 and rule 80, and wherever the aggregate turnover on pan-India basis, if it is more than 5 crores of rupees, then GSTR 9C filing is mandatory. So section 44 does not have any subsections, but it says that any person whose aggregate turnover or whatever it is has to file an annual return. Along with that, if turnover is more than 5 crores, they have to file a reconciliation statement, which is nothing but GSTR 9C. And rule 80 says that the reconciliation statement, the form number is given is as GSTR 9C and the due date is 31st December 2023 for, 2022 for 21-22 financial year. So just GSTR 9C notified by Central Tax notification number 49/2018. With that, the form has been notified. And what we have done in GSTR 9 is clubbing of data in GSTR 1 and GSTR 3B has been done in GSTR 9. Now the task for GSTR 9C is comparing these two figures with books of accounts. And if there is any mismatch between the turnovers or the input tax credit between books of accounts and the GSTR 9, and what are the reasons? If the reasons which are known to us, the reasons which are not known to us, all these things are going to come into GSTR 9C. So now the source for GSTR 9C is books of accounts, or you can say financial statements, and the GSTR 9. Anywhere. For the till up to 1920 financial year, it used to be certified by chartered accountant or a cost accountant. Now that requirement has been done away. Only self-certification is sufficient. Self-certification by the registered person. So our role has been eliminated by the government. Do you aware why that our role is eliminated? There was no collection through 9C. I remember in 17, 18, 18, 19, 19, 20, wherever we have given seminars on 999C, I have only advised. Wrong advice have been given by me only. Let me accept it. We said that why should we take the responsibility on our shoulders? Whatever the difference in GSTR 3B turnovers and the book turnover, you report in GSTR 9, pay the DRC 03, then your books of accounts and 9 will match, then there is no responsibility cast on the chartered accountants. Most of the people have followed it. I also followed it. So that is the reason government says that from GSTR 9, we are getting 900 crores of turnover every year. From DRC 9, GSTR 9C, we are getting only 14 or 15 crores of rupees. What is the fun in keeping this assignment to chartered accounts or a cost accountant and paying hefty fees to the chartered accountant or a cost accountant? So, but now the government is realizing that the issue has been taken to the notice of the government and to the council. They are coming back maybe from 23-24 or 24-25. We are going to get back that assignment back. This has been explained to them. They agreed that. And for GSTR 9, the source is GSTR 3B and GSTR 1 returns. And for GSTR 9C alone, the source documents are GSTR 9, which was filed with the help of Irshad Bhai, and then audited financial statements. My turnover is say 6 crores of rupees, and my business does not involve less than 5% of payments in cash, less than 5% of revenue from operations. So I'm not required to get my accounts audited till 10 crores. I can declare 6% or 8%, whatever it is. I can enjoy the immunity under the scrutiny for the income tax. So my books of accounts, even though my turnover is more than 5 crores, I'm not required to get accounts audited under any statute. Then my unaudited financial statements have to be taken care of, not the audited. There are maybe possibilities. If it is a company or a society or a corporate society, even though it is 2 rupees or 5 rupees, they are undergo audit. But whereas in case of non-audit, non-corporate entities only, this problem may arise in few cases. So now we are at the stage of post GSTR 9 filing. Then we have to follow two methods. One is offline method, another is online method. So offline method, without the help of the internet, we are going to key in the data in GSTR 9C form, and with the help of internet, we are going to file the GSTR 9C return. Those who are, because this is the 5th year of filing the GSTR 9C, everybody is aware, but still at the cost of refreshing our memories, I am repeating all these things. So there are only few steps you have to follow in the entire process. Just download the GSTR 9C offline utility, open it, you will get a Excel spreadsheet. In that, each and every table you add the data, then you generate the PDF preview, check it with your figures. Then if it is okay, then generate a JSON file. With the help of the JSON file, you go to GSTN site and then upload that JSON file. The JSON file will be processed by the server. In maybe few minutes, you will get the results, whether there is any error in the JSON file or not. If there is an error, the server will show this is the error available in the JSON file. Again, rectify those mistakes and again upload the fresh JSON file. Then the server will reprocess it and then say that there is no error. Then you can go forward and file the GSTR 9. So this is how we are to take care of the GSTR 9 file 9C in two steps. One is offline, another is online. So what are the steps involved in GSTR 9C offline filing? We will examine first, then we'll go to online filing. So GSTR 9C per se has 5 parts. Part 1 deals with basic information. Part 2, reconciliation of turnovers declared in audited financial statements and turnover declared in GSTR 9. And part 3 is of reconciliation of taxes, and part 4 is reconciliation of input tax credit. Then part 5 is additional liability arising out of mismatch in GSTR 9 and audited financial statements. Can we go further? Up to here, comfortable? When you download the GSTR 9C offline utility, this is the first page you are going to get. If you select the financial year 21-22, most of the sheets will disappear. If you select 17-18 or 18-19 or 19-20, the spreadsheet will have more number of sheets. So for the financial year 2021-22, certification by cost accountant or a chart account is not required. Thus, those fields have been hidden. So only few tables will appear. If you start filling in those data in those tables, then you can generate the JSON file. So first kind of information is GSTN number, financial year, legal name, trade name, and if you are liable to audit under any other statute, that information, the information is required to be given here. And wherever the red asterisk mark is there, that is a mandatory fields which cannot be left out. Then you will get part 2, reconciliation of turnover declared in audited annual financial statement with turnover declared in annual return GSTR 9. So now we are going to reconcile the turnover as per books of accounts and the GSTR 9 return. So whatever is declared in GST 3B, GSTR 3B is as per the section 9, section 7, section 12, 13, section 15, section 16, 17, 18, 19, 20, all these input tax rate, everything taking into consideration the provisions of GST, the data in GSTR 3B is filled. And the levy of tax comes on the supply. Whereas in books of accounts which are maintained as per the GAAP, which is sales or gross receipts from the business. So which will never match. If it happens that if your books of accounts and the GSTR 3B matching, then there is something wrong in your business. Both should never match because this is supply and this is sales. Both are stands on a different footing. If they're matching, then as Ishad Bhai said, you are lucky. But 99% they will not match. Then only the reconciliation will take place. If you look at this table, there are certain additions to be made and there are deductions to be made. If you look at table 5, first figure is turnover from the audited financial statement, and state-wise trial balance is required to be make out. From that, for which state you are filing GSTR 9C, that turnover has to be brought under 5A. If you look at the last line, Q, turnover declared in annual return GSTR 9. So this gap is the gap between the sales of the Telangana state and the GSTR 3B 9 value for the Telangana state. That gap is now reconciled from 5B to 5O. I think you are all aware of what is the content of this table. We need to deliberate on that. So it is unbilled revenue at the beginning of the financial year. So unbilled revenue beginning of the financial year, it will not be form part of no, I'm sure. We are now annual return 9 and books of accounts. Unbilled revenue at the beginning of the financial year. Will it be form part of books? But will be form part of GSTR 9? Yes. So it has to be added. Simple logical. Logical, but what we did do in BRS statement, the same thing has to be done here. But our attention is required at turnover from April 17 to June 17. That is not applicable to 21-22. If you come to 5J, credit notes accounted for in the audited financial statement, but not permissible under GST law. So section 34 subsection 4 gives us the when you can issue a credit note. If that credit note does not satisfy those 4 conditions under section 34(4), then that is not permissible in GST. But it is form part of books of accounts. By way of a financial credit note, you issued, but GST credit note is not permissible. So there will be a difference. Now it has been reconciled. And if you look at 5O, adjustment in turnover due to reasons not listed above. Don't play with that figure. If it's 1,000 rupees above and 900 rupees below, then if you want to put 100 rupees minus there, then you are taking a risk. Anything which you are going to put into that box specifically, please have a workings for that. Say in case of real estate or maybe a builder, his turnover as per accounting standards is percentage completion method. But whereas in GST, at the end of the project, he'll get the revenue. So that can be a one point here. But everything cannot come and sit into that, whatever is unreconciled. Please don't use that box. And if you look at the end of the GSTR 9C online process, there is one specifically, there is a place provided for attaching balance sheet, attaching profit and loss account. Also, there are 2 more additional fields are there where you can attach optional attachments. If for this 5O box, please attach in advance. Prepare a reconciliation why it is not matching. If you if the case is taken for scrutiny or maybe revision or maybe appeal or in the court of law, if you give the statement which is not uploaded here, the court or the officer may not accept it. But if it is along with GST 9, GSTR 9C, if you uploaded it, then it has a value. It can work as a evidence in safeguarding the registered person. Whatever is not matching, you tabulate it and put it in a Excel sheet or a Word format and convert into PDF, then attach it and upload it. If you do it at a later date, say under section 65, audit is taken care. In that situation, if I say that this is the reason, what is this, without uploading along with this written, the officer may not accept it. We are seeing the situations. Why you are not uploaded along with GSTR 9C, they are asking us. If anything unreconciled, then what is the reasons to be given in table 6? No. For that, you need to have a account. If there is a difference, is on account of accounting treatment only, that will take place. So my turnover is 100 rupees and I reported paid GST on 90 rupees only. Then the 10 rupees I want to keep here and take the shelter under 5O. Then that is not going to work. So maybe, for example, I have a branch in Hyderabad and also have a branch in Vijayawada. Then transfer from this place to that place will take place. That is a turnover under GST, but whereas it is not a turnover under the income tax or maybe a GAAP. So that can be a part here 5O, not everything. Then we have reconciliation of turnover declared in audited financial statements with turnover declared in annual return. So in the previous box, we have reconciled only taxable turnover. Now we are going to reconcile the gross turnovers. So on the total turnover, what is the value as per 5P? Then value of exempted, nil rated, non-GST turnover, no supply turnover. All these figures are already fixed, captured in GSTR 9. That will come here, sit here. Zero rate supplies without payment of tax, supplies on which tax is to be paid by recipient on reverse charge basis, taxable turnover as per adjustment A minus B minus C minus D. All this data is already captured in GSTR 9. No new working is required here. Turnover as per GSTR 9, then if anything is unreconciled, that will come and we have to give an explanation here. Part 3 deals with reconciliation of tax paid. So one is description, rate wise, forward charge and reverse charge and other rates and interest penalty, other sums. And also you have to, as per what is the turnover taxes paid declared and taxable value, which has to be captured from GSTR 9 only. Then central tax, state tax, integrated cess, if applicable. This table now we have to compare with what is the tax already paid along with GSTR 3 return by way of credit, by way of cash utilization. If anything is unreconciled, then reasons has to be given. Reconciliation of taxes paid. This is what is, so from reading of this, reconciliation of rate wise, liability and amount payable thereon. So what is actually payable? So already this data is already captured in table 9 of the GSTR 9. In GSTR 9, we have a column for payable and what is paid. So again, the same data is coming here. So if there you have captured, say, for example, my turnover is 100 rupees and GSTR 3 returns filed for 95 rupees. So for that 95 rupees you identified there. If there is another gap of 5 rupees, then that has to be captured here. So this is going to form part of the additional liability in part 5 also. And this is going to be the reconciliation of input tax credit. No much work has to be done here. Simple format, only 4 columns, 4 boxes we have to fill in. Only it is going to be a wholesome figure. It is not asking us to state-wise and CGST, SGST, all these figures. It is not asking, only simple figures. But one has to be very careful here, because most of the data in GSTR 9 is captured. But if you look at GSTR 9, turnover input tax credit of 2021 reported during 21-22, nowhere it is captured in GSTR 9. This for the first time it is going to be captured in this table only. So in the previous example where Ishad was showing that in GSTR reconciliation statement, he showed 3,500 is as per books and 2,500 is claimed in return and 500 is claimed in the subsequent 1,000 is claimed in subsequent year, and there was a minus 500. That could minus 500 can come and fit it here. For the 21-22, which are claimed in 21-22, that 500 could be that reason. So table 6, table 8 of GSTR 9 are not capturing 21-22 ITC claimed in 21-22. So that is going to come and sit only in this table. One has to be very careful here. So don't make any adjustment in GSTR 9 for 2021 ITC claimed in 21-22. If you make there any adjustment, then this box what you are going to show here. So that minus 500 rupees, what is there in that illustration, that will come and sit here. The ITC booked in earlier financial year, claimed in the current financial year. That is 12B. Then your ITC 3,500 exactly will match. Clear? You want me to repeat once again? Clear. Thank you. And if still there is any unreconciled input tax credit, the reasons has to be given. But most of the cases, it will match. Ishad was saying that in one account, ITC account, we are mentioning 12%, 18%, 5%, 28%, cess, IGST, CGST, SGST, credit availed, credit utilized, credit reversed, and reverse paid and reverse charge mechanism. Everything is accounted in one single account. Then getting this data is very difficult. Yes. Yeah. The input tax credit for the financial year 2021, which was claimed in the subsequent financial, that is 21-22, as per section 16, subsection 4. GSTR 9, table 6 and 8 does not capture this information. So the illustration shown by Irshad, it says that 3,500 was the total input. Out of that, current year input is 2,500, and this financial year 21-22 input claimed in 22-23 was 1,000. So there was a minus 500 rupees there. So that is what is claimed for the year 21-22 in 22-23. So that information has to be given in 12B here. No, I could not. Can you repeat? Huh? Who is asking this question? Chapan sir. Okay. Yes. No, I'm not talking about carry forward. There could be possibility of input tax credit available in your electronic credit ledger. We are not disputing that. No, it is possible, sir. Section 16, subsection 4 permits you to claim the input. 16 subsection 4 permits you to claim the previous financial year input tax in the subsequent financial till September 30th, till last year. Now it is up to November 30th. Not modification, sir. Claim itself. Claim itself. Not by amendment, not by debit or credit notes. Claim itself you can make. It is permitted. 12C is ITC booked in the current year, yet to be claimed in the subsequent financial year. So 21-22 input, what is claimed in 2023, that is 1,000 rupees that will come and sit here. And the ITC availed as per audited financial statements of books of accounts A minus B minus C, then compare with GSTR 9, it will match automatically. Still, there is any difference that has to be reported here to be given as a reasons. And finding those reasons is very, very difficult. If we are filing the returns, we are maintaining the books of accounts, then we are filing GSTR 99C, then it is possible to give the reasons. Someone is maintaining books of accounts, other A is maintaining books of accounts, and B is filing GSTR monthly returns, and C is reconciling. Very difficult. And particularly in case of government contractors, when they declare turnover, when they declare ITC, when they declare what, nobody knows. Recently, one of my enthusiastic client, he said, we will file GSTR 99C on our own because no certification required. That means I said, okay, file it. While filing GSTR 9, they forgot to claim the input tax credit. 6 crores. It is coming negative figure now. Now it comes to me what to do. I don't have any solution for that. You pay it back to the government. So my fees of 1 lakh rupees was, you were feeling costlier, then now it has become 6 crores of liability. This is optional table. If you have information, fill it. Otherwise, you can leave it. This 22-23 also, it is 21-22 also, it is optional. This table is optional. Breakup is optional. Without this table, you can file GSTR 9C. You have filed. What will happen here? The input as per GSTR 9 and the previous table input, if you add all these expenditure, even there is a 1 paisa difference, the table is, the 9C cannot be filed. And it is becoming very difficult task to bifurcate the ITC into various heads and match up the figures, what is mentioned in GSTR 9 and also in the previous table, and come to the same figure. It is becoming very difficult. If you want to match it with, say, purchases, then your purchase will not match here. Somewhere or other, from the day one, if you are able to capture the data and keep it ready for GSTR 9C filing, then it is possible. Otherwise, very difficult task. At least for the financial year 21-22, it is optional. Sir, this table is optional now. But still, you are getting. You can file the return. You can file it. But the department is not analyzing this table at least. Maybe from next year onwards, they may look into it. And this is table part 4, reconciliation of ITC input tax credit. Out of that amount, the one figure which you have given, it has to bifurcate into CGST, SGST, IGST, cess, interest, and penalties. Part 5, additional liability due to non-reconciliation. Anything which is not reconciled, maybe from ITC point of view or from the output point of view, anything is unreconciled and any additional liability is coming out of GSTR 9C, that has to be declared here and it has to be paid by DRC 03, taking the option of annual return. So with this, we'll prepare Excel sheet. From there, you will generate PDF preview. With that help of the PDF preview, you will be able to verify the cross-check the figures. Once you cross-check figures and they are matching with that, then you can generate the JSON file and upload to the server. So now we'll go into the online mode I think I need not spend much time on this. You have to log in into the portal, select the annual return, and select the financial year 21-22. Then press the button. Already GSTR 9 is filed. Then for GSTR 9C, you press the button, initiate filing. Then you will get this dialog, this screen, and select the choose file and upload the JSON file, which is generated with the help of GSTR 9C offline utility, and then upload it. If the JSON file is proper, then it is the come status as processed, error report not applicable. Then you can file your return. And you have to upload attach the balance sheet and then profit and loss account. Then optional, any optional attachments are, you can upload those optional attachments also. Then you have to proceed to press the proceed to file return, and then you will get this green color message that you are ready and you can go move further. And it will give a warning and attach your digital signature or OTP, file it. Then there is the end of filing of GSTR 9C. By filing GSTR 9 and 9C, the fate of the registered person is closed. The fate of the registered person is closed for that financial year. Whatever you wanted to do in GST, that is the end. So what will happen after filing? So section 59 says that self-assessment mechanism. So filing of GSTR 1 and GSTR 3B is self-assessment mechanism. But GSTR 9 and 9C also self-assessment mechanism, but nowhere mentioned in the statute. But from the form in which it is designed, the form, the tables which they speak, so the last opportunity for the registered person to rectify his mistakes. So this is a final opportunity to rectify typographical mistake, clerical mistake, calculation mistakes and mismatches. Everything what is ever there that can be done only by filing GSTR 9 and 9C. So the end of self-assessment under section 59. Once it is end of the self-assessment under section 59, whatever the department invokes the provisions, it will carry interest, penalty. 4 things it will carry: tax, interest, penalty, and 4th one I need not tell you. I think you are understood me. So 4th thing I need not tell you, it is embedded into the system. Once it is 9.9c is filed, you cannot do anything. You have to be very careful in collecting the data, segregating it, filling the data, and filing the data. Filling is most crucial. Filing only a mechanical process. One has to be careful in getting the data and converting the data into information. From there, all this process will take care. So what will happen under section 61? So section 61 talks about the scrutiny of returns. So any return filed by the registered person, if there are any clerical mistakes or arithmetical mistakes, then the department will take up for the scrutiny under section 61. If there are mistakes in GSTR 99C, section 61 is not covered. Return filed, this is annual return, that is not written. Then matter will go to 65 and 66 section. 65 talks about audit by department. Section 66 is by special audit by chartered accountant, cost accountant, or company secretary or advocate, whoever is appointed as special auditor. So in that process, the stand taken by the registered person will prevail over the officer unless it is been captured in GSTR 99C. Department finds that on this particular amount, you have not paid the tax. You have taken excess input tax credit. So how we are going to safeguard ourselves is by GSTR 99C only. If that aspect has been covered in the annual return, then our journey is going to be smooth. If that is left out, till 1920, even the chartered accountant who has certified is also into soup. In most of the cases, we have certified saying that environmental cess levied by the municipality on the builder is not liable for reverse charge mechanism. So many have taken various stands, but we have taken stand that it is not liable. So we have not bothered to pay tax under reverse charge mechanism on environmental fees paid to the municipality by the builder. Now the department comes for audit and they say that any services provided by the state government, central government or local authority or a municipality to a business entity liable for reverse charge mechanism at the rate of 18% as per notification number 13/2017 central tax rate. So the department is saying that you are liable in audit. We have taken a stand that it is not liable. This fact has been not brought into GSTR 9 and 9C. Now it is explaining to the officer is now it will become very difficult. Shops and establishment fee paid to municipality. This is also now it has become a very good topic for the officers to raise the reverse charge mechanism. Whether it is really liable, royalty paid to the government is really liable. Bank guarantee given by the corporate to another entity of the same group by the corporate office. Is it liable for reverse charge or forward charge? All these questions are going to come in audit. They are not going to leave anything. They get data from your books of accounts only. They get data from your financial statements. Are we really looking into these aspects? Our client says that I am paying to the lorry fellow, he is not issuing me any consignment note or LR, lorry receipt. Then we are saying that not liable. But after the end of the year, it is on fine day, it appears in GSTR 2A. Some registered person not even reporting, but they are issuing LRs. When department comes for inspection or search or survey, then all these LRs will come into light of the day. Then what is the plight of the chartered accountant who has certified those for 17, 18, 18, 19, 19, 20? So these are all issues are going to come up in audit by the department. And coming to section 73, 74, that is adjudication process under the GST law. Section 73, where fraud, misstatement, misrepresentation is not involved, then 73 is invoked. If fraud, misstatement, misrepresentation are there, then 74 will be invoked by the department. In both the situations, the time limit only the difference. Otherwise, similar provisions and the penalty provisions are different from 73 to 74. So how the department in adjudication is going to look into GSTR 9? And your reconciliation in GSTR 9C, that is more important. And whatever all the notices issued by the state government in the tabular format are based on GSTR 9 and 9C only. It is not on 3B or 1. So this is the importance of GSTR 9 and 9C. Section 67, which deals about 67 subsection 1 deals with inspection, and 67 subsection 2 deals with search. All these things will take post-mortem only. It is not during the operations. So we filed the returns today and we'll file after the end of the financial year, we file the GSTR 9. After 4 years or 3 years, department will come on to the search operations. And if the tax involved is more than 5 crore rupees, non-bailable, cognizable offense and liable for arrest. If it is between 2 crores and 5 crores, bailable and non-cognizable, non-cognizable and bailable offense. So how you are going to safeguard yourself? Department says that you have taken in excess input tax credit of 5 crores and we are going to arrest you. Is there any mention in your GSTR 999C which is going to safeguard you? Department says that you have traded in invoices in 67. You have issued fake invoices. And is any mention by your auditor in the annual return? Whether he has verified all the transactions? Section 50, liability for interest. If you are discharged in annual return, there is no problem. Otherwise, later also you can discharge before issuance of show cause notice. Before issuance of show cause notice, if you pay interest, no problem. Otherwise, you are to even liable for the penalties. So, one show cause notice issued nowadays covering 4 to 5 sections of penalties. Penalty under section 74, penalty under section 122, 132, 125, so many sections. And also during the revisions, appeals and court proceedings, this GSTR 9 and 9C is going to safeguard the registered person. So please pay attention while filing GSTR 99C. Don't do this activity mechanically. Please apply due diligence with care, and we are going to fix the fate of our client. Because of our mistake, you should not be behind bars. We may be having a small client, but still, the involvement of tax may not be more than 5 crores, but still. With this, I conclude my presentation. Thank you very much for your patient listening. And I wanted to mention one thing about this last slide. This slide was designed by graphicscrate.com, and it was the client of my friend. So for him, they have designed it. And my friend has given this slide to me, please use in your presentations. And that friend is not anymore now. His name is AC Gangaya. So he has given me this. So whenever I see this slide, I get remembrance of AC Gangaya, sir. Thank you very much.
So I thank you very much, Satish Bhai, for your wonderful presentation. A big round of applause once again. Thank you so much. So we'll start question and answer session, and most of the questions should go to Mr. Satish, because so wherever you want me to answer, you please specify. Thank you.
Nine C, table number 8.
Table number 8C, return number 9. That is
ITs on inward supplies, other than imports and inward supplies liable to reverse charge, but included in service covered in SEZ received during the financial year, but awaited the next financial year up to the specified date. Yes.
8C, 30.
So 21, 22, input tax credit claimed in 22, 23 is some year. Yes. Not 21, 22.
Option by. And I think 12C is
ITC available for previous financial year.
return number 9.
13, that is says ITC available for the previous financial year. And while they are taking the session on that, Ishad Bhai said that there is no clarity, and the explanation given in the table speaks about something different to what is written here.
I explained to the state government officer very clearly, this is pertains to the next year. But he is insisting, no, look at the language of the table.
What explanation is different?
And the 12C also in 9C. sir.
Nine C. 12C. 12C. ITC booked in current financial year to be claimed in the subsequent financial year. So 21-22 is claimed in 22-22. So same data of 9 will come here. But 8C. 8C will come 12C here. 12C. Yeah, 10, 11, 12, 13 are 11, 12, 13, 14 are options.
Or we would say regarding the compare address of 24 of and we have given the compare address, but